Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darad. Well, now today also the things don't look better either because yesterday Nifty extended its losing streak to the ninth day and it could be 10 today also because the GIFT Nifty is implying a gap down start for our own markets. But on that note, let's quickly get on board with our technical expert of the show. We have with us Ajit Mishra of Religare Broking. Ajit, good morning. So good to have you back. Yesterday, Nifty did test that 22,000 levels. We did make an intraday low of 22,004. Do you expect this to hold this level? Because the pre-open rates definitely are pointing out to a downside to it.
Yeah, good morning, Lavisha. So yes, we are in the sixth month of decline. Means 5 months. Last month itself was roughly around 5.5% kind of a cut, and it's a gradual and grinding, fall that we are seeing in the markets. Means we are roughly down around 15-16% as of now. This zone 21,800, 22,000 has multiple supports for the index, but the way we are seeing that, be it the negativity on the global front, at the same time the continuous outflow from the foreign fund, all these are impacting the sentiments and triggering the decline on every uptick. So today is going to be critical. In fact, the next couple of sessions, because the issue or the challenges around the tariffs is reality now, and we'll see the retaliation from the other nations as well. So how it's going to impact the global scenario is something that the market will continue to react to. So, but as of now, from the trading perspective, 21,800, 22,000 is very critical to hold for any meaningful recovery or a rebound in the markets. Another important factor that banking, which has been showing resilience so far, is the only sector which is outperforming the index as of now. 47,500 in case if it breaks banking index. So that might trigger the next leg of the down move in the market. And lastly, Reliance, the heavyweight, which was holding in a range for quite some time now. In the last trading session, it was the key reason that why the markets failed to capitalize on the initial, recovery. So all these factors are going to impact, but 21,800, 22,000 is something that one should keep a close eye on.
All right. 21,800 for Nifty and 47,500 for Bank Nifty that we need to watch out for. But Ajit, what about the Nifty Auto Index? Yesterday, it did react well to the sales figures that came out in the month of February. Do you expect a good reversal on the horizon, or how are you placed on the index?
So auto also we are seeing, extreme oversold position in some of these pockets, especially the two-wheelers name like Bajaj Auto, Hero MotoCorp. Still, we are not seeing any respite. So we have very limited stocks wherein, one can see some bit of a consolidation or, a strength. So Eicher, M&M, Maruti, these are some of the names wherein we are seeing relatively high strength. But otherwise, most of the names, they are still struggling. So as of now, I would recommend that one should not get carried away due to the oversold position, that there could be a recovery on the horizon. One needs to wait and watch and see any decisive sign of reversal. In the meanwhile, also the focus should be only on the stock which are showing relatively high strength, the name that we have just mentioned. So avoid any aggressive longs, even in auto pack as of now. So only banking, financials and metals. These are the three key sectors wherein we are seeing relatively higher strength. Rest of the pack, they are trading in sync with the markets.
Okay, banking, financials and metals that you mentioned that you're currently watching out for. But what about the Nifty IT index, Ajit? Because after like couple of sessions of underperformance, yesterday IT index did a bit better, saw a little bit of recovery. But what is the near-term outlook look for the IT index?
So yes, in fact, IT and banking till last week was among the performers, outperformers. But the way most of the IT majors declined last week, that has definitely pushed the bulls slightly on the back foot now. But for the index, I believe that this zone, 37,000 mark, is a strong support area. probably we can see some time-wise correction now after this sharp decline in the prices, especially in the heavyweights, and probably then a possible recovery or a rebound. So IT, I believe that it's an opportunity now. Those who are sitting on the sidelines to accumulate quality name, especially the large cap IT name like TCS, Infosys, HCL Tech, they can look to accumulate them gradually from here on, because possibility of outperformance in the next leg of the up move seems high from the IT pack as well.
Okay, all right. Let's talk about Nifty Mid Cap Index, Ajit, because yesterday it ended slightly in the green and broke its 5-day losing streak. I won't talk about small caps at this point of time because it still continues to remain under pressure. But how are you placed on the Nifty Mid Cap Index?
So yeah, within the broader indices, mid cap is comparatively faring well so far, but still I feel that one should refrain from any aggressive longs in mid cap space, and especially those who are holding their longs at the higher levels. Please do not add to those positions, because possibility of underperformance from the mid cap and small cap still seems high, even if we see a pause or recovery attempt in the benchmark index. So possibly that price wise also we may see further correction of 5 to 8% from the current levels in mid cap and small cap. So you are better off avoiding any fresh long and adding to your existing position. But yes, those who are planning to invest, larger mid cap name is something that one can look as a opportunity.
Okay, all right. Let's talk about one brokerage note that has come out this morning. Well, Investec has come out with its report on EMS, where it has upgraded Keynes Technology and Sirma SGS counters, as they believe that the valuations in both of these counters have become more reasonable, and they see a strong growth potential for both of these counters, and of course the EMS sector too. Ajit, what is your overall view on the EMS space? How do you see the stocks and the counters going forward?
Right. So, there was noticeable outperformance in most of these names. Means, Keynes in the last 4 5 weeks, we have seen a sharp decline. So, it is normal, because usually we see, especially in the second leg of the decline, wherein people are still in profits, they try to book or book their profits to hold their losing position. So that is what we are seeing in most of these names. That after this decline, they are somehow now trying to consolidate and form a base. So we believe for Keynes, definitely 3,500 is a strong base. One can gradually look to accumulate these names with a medium to long term horizon.
Okay, gradually accumulate for a long-term horizon. That's the key takeaway. But the first trades coming on your screen on the markets open, well, we did open in 20 below that 22,000 mark, but we have seen a bit of a reversal, and now it is like we are seeing a bit of a downtick, like 0.5% cut coming in for the Nifty 50. Again, we're slipping down, but we are just testing that 22,000 levels. Sensex, however, that is open in the red too, and 300 points downtick for the Sensex too. If you look at the mid cap and small cap indices, both of them are seeing a cut of about 1%. Mid caps down about 1%. Small caps more than 0.5% at this point of time. Sectoral indices. Yesterday, Nifty Auto Index did end slightly in the green, but today it has once again opened in the red with a cut of about 1%. Nifty IT Index also opens the day lower, 1% cut coming in for the Nifty IT Index, and metal indices also seeing a cut of about 1% too. On the other hand, what is holding well for the markets, definitely right now, most of the rates are unchanged, but majority of the sectors have opened in the red itself. Nifty Realty also unchanged at this point of time. Nifty Metal Index down in the red. Nifty Media Index also with nearly 0.5% cut, and Nifty PSU Banks also with about 0.7% cut coming in. Let's take a look at some of the Nifty gainers. Well, just one gainer at this point of time, ICICI Bank with 0.3% gain coming in. On the other hand, if you look at the top losers on the Nifty, that just includes your ONGC, Tech Mahindra, Tata Steel, Hindalco, all seeing a cuts of about nearly 1 to 2% right now. But ICICI Bank holding well. What is your view on the counter, Ajit?
So, Lavisha, like what we've shared, banking, financials, and metal, these are three packs which are trying to, cap the pace of decline in the index. And ICICI, particularly within the private banking majors, is outperforming as of now. Though the stock has slipped below its major averages and trying to consolidate around that area, we feel that sideways tone is something which might continue in the near future. So around 1190 to 1240 is something that the stock might hover in. So fresh buying is something that obviously considering the market tone is something one can avoid. But those who are holding longs, 1200 should be the stop loss. And in case of recovery around 1240, 1260 area, they should look to book profits.
Okay, around 1260 area, we can look to book profits for ICICI Bank. But one stock which is reacting well today despite a weak market, that is your Ask Automotive. Well, the company did sign a technical assistance and license agreement with Kyosho Yanagawa for cast wheel production. Ajit, the stock has seen significant correction in the past month. Do you expect the selling pressure to continue, or today is just a short-lived bounce that we are seeing on the counter?
So the last 4-5 session it was a very sharp decline from 440 to 340 in no time, and now after retesting its previous base around this 300 320 area, we are seeing this attempt of recovery. So it's too early to say that we are going to see any meaningful recovery or reversal. But those who are holding strong, they can stay put because we have retested the base already. This decline was almost vertical. So there is a possibility that we might see a recovery attempt towards 365, 370 area in the near future. So around that area is something that one can look to reduce their position and maintain a stop at 320 in the interim as well.
Okay, all right. Let's take another stock in focus, that is your RBL Bank. Well, the stock is not reacting well today, also because the GST authorities have initiated search at 3 offices of the bank in Maharashtra. The proceedings are ongoing and the bank said that they're fully cooperating in providing data as per the request. Quite a negative news, Ajit. Where do you expect the stock to go? Because the trend has been quite negative so far in the past 6 months.
That's true. And in fact, if you see Bandhan, RBL, they are consistent underperformers within the banking space. And the last, 4-5 months, we were seeing the stock forming some consolidation range. It's 175 to 145 is something that it's been hovering in. Now we are again reaching closer to the lower band, and with the negative news in place, possibly a breakdown is on the horizon. So from the trading point of view, I would recommend to exit if you have any existing longs. In fact, one can go short below 150 mark with 160 as a stop loss and around 125, 130 as a position target.
Okay, all right. Let's take some viewer queries at this point of time because they've been waiting for us. Well, the first query coming in from Naveen, he's asking whether it is a better choice to go with Voltas or Blue Star. If you look at 3 months, Blue Star has relatively outperformed Voltas, but what is your view, Ajit, on both of these counters?
So Blue Star definitely is outperforming Voltas because if you'll see from the correction point of view also, it didn't fall much during this recent decline. Means it retraced to its long-term averages, and now we are seeing a strong base formation followed by a recovery. The last trading session, the volumes were strongly up, so all indications are in the favor that we might see a outperformance continuing from Blue Star and possibly a retest of the record high as well around 2250, 2300 mark. So here with stop at 1900 on the closing basis, definitely you can go ahead with Blue Star as a preferred pick among these two.
Okay, Blue Star is a preferred pick. But let's move on with another viewer query. Well, Satya is asking that he's booked his losses in IDFC, Karnataka and IndusInd Bank for tax purposes. And he's asking what is the best option in private banks for entering fresh positions for the next 2 years. Any thoughts on this, Ajit?
So I would recommend HDFC and ICICI definitely something that you can look to invest from the 2-year time horizon, considering that they both are outperforming within the sector, and we expect this outperformance to further strengthen once we see the recovery in the markets.
All right. Let's move on to another viewer query, that is your Debu K is asking the views on Bondada Engineering. Bondada Engineering, if you look at the past 1 month, it's a very negative trend because it has seen a sharp over 30% correction. But what are your thoughts on the stock, Ajit?
So after this sharp correction, there could be some consolidation, but I would recommend not to get carried away with the intermediate bounce or a recovery. Since the trend is clearly down, one should refrain from any aggressive longs. Those who are holding longs, they can in fact look to reduce their position on any rebound towards 360, 370 zone.
Okay, all right. Another viewer query coming in from Shweta Naidu. She's saying that she's bought KPI Green shares at 416 rupees and she's at 10% loss at this point of time. So she's asking whether she should average, hold, or exit the counter. Any thoughts, Ajit?
So it's highly volatile these days, means from around sub 300 to 480 and then again towards 375 area. I would rather suggest to reduce our position and wait for any dip towards 300 to re-enter or add more, or only if you are looking for a short-term point of view or time horizon, let's say less than 6 months, then wait for a close above 500 to buy fresh. Otherwise, you can exit because likely to witness some time-wise correction after this recent dip.
Okay, all right. Let's talk about another viewer query, that is your Kal Paruksha is asking the view on Titan. Titan, if we see today morning itself, we've had a brokerage note, Macquarie, which has come out with an outperform call for the counter and it's seeing a potential upside of about 30% from current levels. Ajit, how does the counter look like? Because if you look at from the 6 months charts, the stock has been fairly resilient. But what is the near-term outlook hold for the counter?
That's true because Titan has been hovering in this band roughly around 3,000, 3,800, and now we are at the lower band, lower range of this band. Short term, we might see some pain considering the market underperformance, so that may result in further dip towards let's say 2,900, 2,850 zone. But it's a good buying opportunity, especially for those who are looking for a fresh investment. So yes, you can start accumulating around 3,000 area and keep on accumulating on every dip towards 2,800 mark.
Okay, 2,800 mark. But let's move on to another viewer query. That is your Kishore is asking the view on IGIL at the current price. So this is your International Gemological Institute. How does the stock look like, Ajit? Because yesterday the stock did hit a 10% lower circuit on its muted Q3 performance. But what can we eye out for the near term?
And today also, Lavisha, it's down by around 7%, though we are seeing some bit of a recovery now. See, most of the names, Lavisha, those counters which are listed in the last 6 months, we are seeing almost a similar trend. Means mostly stocks are trading to their 52 weeks low, and it's not different to what we are seeing overall in the market as well. But yes, the fancy around certain stocks during this IPO season, now we are seeing that the reality is hitting in, and we are seeing this correction. So I would recommend to avoid averaging at least to your long trades. If you have made investment, definitely you can stay put, but wait for at least couple of quarters results to see how the companies actually perform, and then take a call.
Okay, all right. Let's move on to another viewer query. That is your Shwaraj is asking the view on Tata Steel. I know that Ajit, you did mention that you're bullish on the metals metal space, but how are you placed on Tata Steel? Because the stock has outperformed in the past 1 month.
That's true, and in fact, if you see within the metal space, Hindalco, JSW Steel, Jindal Steel, they are the top performer as of now. But Tata Steel also, I believe that at least in case if market corrects further, let's say from the current area, the downside seems capped. So definitely you can stay put if your time horizon is let's say 6 months to 1 year time horizon. Once we break this 145 area, probably we can set for the next leg of the up move towards 160 or 170 zone in next 6 months to 1 year time horizon. So with stop at 120, definitely you can stay put.
Okay, stay put on the counter. Let's move on to another viewer query. Shweta Naidu is asking the view on Dixon Tech, and she's seeing a 11% loss. So should she average right now, or will it take more time to recover? How does the stock look like on the charts? Q3 performance was quite good. We saw both the top line double in the third quarter. But how are you placed on the counter, Ajit?
The move was phenomenal, means from roughly around 3,000 to 19,000, almost a vertical rise. So now we are seeing a meaningful correction, means the stock is still holding above its long-term averages. But from the trading point of view, it's very important to have stop losses in place, and 13,200 is the area basically where we have multiple supports in Dixon. So if it breaks this area, definitely you should not look at the fundamentals, because if the time horizon less than 6 months, because in that case we can see a meaningful correction which may push the stock toward 12,000 mark and maybe lower. But if it manages to hold this zone, then definitely in, let's say, 3 to 6 month time horizon, 16,200 to 16,800 is something that the stock might test.
Okay, all right. Let's look at one stock in focus, which is your REC. The stock is reacting negatively, but the company plans to consider revision in market borrowing program of the company for FY25 on March 7th. So, Ajit, REC yesterday saw strong buying interest, and we even saw CLSA upgrade the counter to an high conviction outperform. But where do you see the stock over the near term?
Right. So here also, like within the PSU basket, we saw very strong performance from REC, and now we are seeing correction. The good part is that it looks extremely oversold now, but since the market tone is negative, we are not seeing any meaningful recovery so far. Probably around 395 is something that the stock might face resistance again in case there will be any meaningful recovery. But from the short term point of view, you should definitely maintain a stop at 360 and wait for a recovery towards 395 to 400 to reduce your position if the time horizon is less than 6 months.
Okay, all right. Well, let's move on to another viewer query. That is, your Kishore is asking the view on Ahluwalia contracts. If you look at past 1 month, the stock hasn't fared well, Ajit, and even the Q3 results were not promising. What should you advise? Should he book losses, or should he exit the counter at this point of time?
So consolidation is more likely after this, underperformance. But since the stock is extremely oversold, there could be a possibility of marginal rebound. So I would recommend that one can wait for any recovery toward, let's say, 5-7% from the current area, and then look to exit this longs.
All right, exit this longs. But let's take another stock in focus, which is your IEX. Well, the index did register a 9% year-on-year rise in trade volumes in the month of February, while we saw that the total sale of renewable energy certificates jumped about more than 2x in year-on-year. In the electricity market, the day-ahead market, which is your DAM, increased about 14% year-on-year, and the real-time electricity rose by 23% year-on-year. IEX, Ajit, how does the stock look like on the charts? Because it is fairly underperformed, but what is the near-term hold for the stock counter?
Yes, so Lavisha, it's almost like roller coaster ride for IEX, means from 120 to 240 and then again to around 150 area. But we are very closer to the major support or accumulation zone. So 140, 150 is a very strong support area for IEX. Short term, yes, it might continue to hover in the range once we retest this 150 area, 148 area, and upside around 163, 165 is something that might act as a resistance. So for the short term point of view, I would recommend to utilize any recovery towards 160 area to reduce your position. And those who are holding it for the long term investment, they can definitely stay put with 140 as a closing stop.
Okay, all right. 140 is a closing stop. But Ajit, just one last question before we let you go. Are you finding any buying opportunities in this market, or are you staying put? What is your strategy? And if there are any picks, then do list it out.
So yes, like what we've discussed about banking and financials. So within the banking NBFC space, Bajaj Finance. After this almost 3.5 year long consolidation, the stock has witnessed a decisive breakout, and despite all this turmoil, the stock is holding around its record high. So definitely it's something that one can look to accumulate Bajaj Finance even at current levels after this strong up move. 8,500, 8,600 is your buying zone, 8,200 should be your closing stop loss, and 93, 9,400 should be your positional target. But at the same time, since the tone is negative, one should maintain few shorts also. So GAIL is something wherein we are seeing fresh breakdown. So if the time horizon is, let's say, for a week or two, one can even go short even at current levels with 158 as a stop loss and 140 as a target zone.
Okay, all right. All right, with that, we have to let you go, Ajit. But thank you so much for your time and answering our viewer queries. We'll hope that we connect with you soon.
Thank you.
30 for closing, and we will be discussing how the market has developed, what the stocks were in focus. Until then, signing off. Do stay tuned to moneycontrol.com.